The Kremlin understands that the war against Ukraine is also devastating for Russia, but the Russian army still has the potential to advance further. This is the assessment of Kirill Budanov, chief of the main Directorate of Intelligence of Ukraine. According to him, the full-scale invasion of Ukraine is costing the aggressor country an enormous amount. Russia spends approximately $1 billion per day on the war.
Це взагалі дуже дорога війна.
This is an extremely expensive war. A single day of war costs them just under $1 billion, an enormous sum. As for human resources, we must not deceive ourselves. Russia's mobilization potential, according to calculations, allows them to continue advancing. However, the pace and the number of casualties are factors they cannot ignore, and they do take them into account.
The head of Ukrainian intelligence also reminded that, according to official data, Russia's defense budget accounts for 41% of the country's main expenditure.
Це ненормальні цифри.
These are abnormal figures. To accommodate this budget, nearly all social programs, including healthcare and education, have been cut. The negative financial and economic impact on the Russian Federation is already noticeable. However, as long as they have oil, gas, metals, and precious stones, they will try to balance the situation.
Pouring most of the budget into the military-industrial complex has already given results. The truth is disappointing. Inflation of 10%, an interest rate of 21%, rising food prices, and falling incomes of citizens. One of Russia's largest dairy producers has already announced it will raise its wholesale prices by up to 15% in March. Prices are not the only thing rising, so is overdue mortgage debt. Russia's total overdue mortgage debt has reached nearly 100 billion rubles. Meanwhile, the total volume of mortgage loans has grown by 7% over the past year, reaching over 19 trillion rubles by early January, according to the central bank.
In 2023, the total mortgage portfolio in Russia increased by 4.2 trillion rubles, compared to 2.1 trillion in 2022. Until July 2024, Russia had a widespread preferential mortgage program for new buildings at an 8% interest rate. The opportunity to buy real estate at minimal rates encouraged many to take out mortgages without fully assessing their financial capabilities. Evgeny Shavnev, CEO of the real estate investment company Flip LLC, cited by the Moscow Times.
Russia's industrial production growth has also slowed, according to the Ministry of Economic Development. In January 2025, industrial output increased by just 2%, half of the average growth rate from the previous year. While the defense sector is ramping up production, civilian industries are struggling. Furniture production fell by 2.4% in January, clothing and footwear output fell by almost 3.5%, and food processing slowed by 2%. At the same time, the central bank continues to report that Russia's GDP grew by more than 4% last year.
Although GDP growth formally remains high, real productive activity in the economy has almost ceased to expand. Almost all of the recorded growth comes from the defense sector. Without it, production levels remain at 2021 levels. Civilian industries have been stagnating since mid-2023, and in the second half of last year, even with the defense boom, the entire industrial sector entered stagnation. From the report of the Center for Macroeconomic Analysis and Short-Term Forecasting.
Nearly a third of Russia's logistic companies are on the verge of bankruptcy. Experts warn that if the government does not provide support, at least 30% of market participants will go bankrupt in 2025. This would lead to a shortage of transportation equipment, a 25% increase in shipping rates, and a rise in consumer prices. According to the IMP, Russia's economic growth is expected to slow nearly threefold from its current level to just 1.5% in 2025. Reported by Katerina Bastun, Yulia Granovska, UATV News.
The head of Russia's central bank has announced that as of February 10, inflation in Russia has reached 10%. Elvira Nabiulina called this figure unacceptably high. According to the central bank's forecast, inflation will peak between April and May 2025, possibly extending into July following the annual tariff indexation tariff hikes. By the end of the year, inflation is expected to settle at 7 to 8%, meaning the target of 4% is now postponed until at least 2026. As a result, private consumption in Russia is projected to grow by no more than 1.5%, while investment growth may grind to a halt entirely.
We are not expecting a wave of bankruptcies. Of course, there are highly indebted companies for whom rising debt servicing costs are a significant factor, substantially reducing their profits. Elvira Nabiulina, governor of the Bank of Russia, from the Moscow Times publication.
Last year, inflation fueled by huge military spending and wage increases due to staffing shortages beat the Central Bank of Russia's updated forecasts 3 times. To curb inflation, Russia's central bank raised interest rates to a record high 21% in 2024. Economists believe that a rate cut is not expected in the near future.
The interest rate is likely to remain at current levels until inflation consistently declines and the economic slowdown becomes not just noticeable but unavoidable. Anton Tabak, economist, from the Moscow Times publication.
Russia's war against Ukraine is becoming increasingly expensive for Russian taxpayers. Russian citizens are feeling the strain as their purchasing power declines. According to Rosstat, prices have risen nearly 10% over the past year and continue to climb. The most significant price hikes have been in utilities due to rising tariffs and food. Major Russian dairy producers have warned retailers of a planned 7 to 10% price increase in February.
According to Ramir's data, the actual increase in consumer prices is between 20 to 30%, which is already galloping inflation. The situation is clear. Inflation is raging in Russia, creating major problems for the Ministry of Finance. The central bank tried to fight inflation using market-based measures. It still believes that a market economy exists in Russia. They raised interest rates, which is a classic market tool, but none of it is working. In December, there was no rate hike, and there won't be one in February either, because it simply has no effect on inflation. But they are moving towards something even worse, directly restricting loans for Russian businesses.
In January 2025, the total volume of loans to households collapsed by nearly 50% compared to January 2024. This has caused a sharp downturn in the real estate market. Developers unable to rely on bank financing have started selling apartments on installment plans, a practice the central bank disapproves. Russians are accumulating debts while their creditworthiness is not formally affected.
This means that loans can be granted to those who, in accordance with the restrictions imposed by the Bank of Russia, are not entitled to them under any circumstances. Banks are failing to assess risks properly, and as a consequence, there is an increase in defaults, overdue payments, and personal bankruptcies. Additionally, the terms of sale are often non-transparent. What appears to be a zero-interest or low-interest loan can actually result in massive overpayments due to hidden fees and penalties. Finally, the financial health of developers is deteriorating, raising credit risks for the construction sector. Maxim Blant, economic analyst for Radio Liberty.
Russia's economy could slip into a technical recession before inflation is brought under control, economists warn. The Kremlin is particularly concerned about a potential increase in oil production in the US and OPEC countries, according to reports from the Russian Ministry of Economy and the central bank, writes Reuters.
The lack of investment now is a lack of GDP growth, lower growth rates in 2 to 3 years. Both the Economy Ministry and Central Bank flagged the danger of lower oil prices, which could cause problems for the federal budget. From the Reuters publication.
An increase in global oil production and falling prices would mean a sharp decline in Russian governmental revenues. Experts predict that, as usual, social spending will be the first to face budget cuts. Reported by Serhiy Kulias, Yulia Granovska, UATV News.